Hey, what's going on, everyone? Christian Carter from Radius, and today we are going over something that I get asked about all the time: construction loans and renovation loans. What's the difference? Are they the same thing? So, construction loans. Here's a quick definition for you. Construction loans: financing for construction of a new residential home on property already owned or purchased concurrently with the loan closing. So what does that mean? So a construction loan is when you are buying a piece of land and then you are building a house from scratch on that piece of land. Okay? That is a construction loan. Now, a renovation loan or a rehab loan is financing for the purchase or refinance of an existing home along with funds for renovation, repairs, remodeling, or energy improvements to that home. So when you're thinking about a renovation loan, here's the key piece right here: existing home. So with a renovation loan, you are improving a home that has already been built, right? That's already there. So maybe you're putting a new roof on it. Maybe you're putting an addition on it. Maybe you are replacing the septic system of that current home. But the thing to remember here is that a renovation loan or a rehab loan, you're dealing with an existing property. There's already a structure on that piece of ground. All right, let's hop back over here. Now that we've already defined what a construction loan is and what a renovation loan is, there's a couple points on each that I want to point out. So, construction loan. This is typically one closing or two closings. This topic right here is a whole separate video, and I will shoot a video on what's the difference between one closing or two closings. But when you're thinking construction loan, you're thinking either one closing or two closings, right? All right, monthly mortgage payment. This is important. So during the construction period, your monthly mortgage payment is going to be interest only, right? So as the home is being built, you're only going to be paying interest on the money that you've paid out, right? So let's say, for example, they're putting in the foundation, and that's the first step. And the foundation costs $20,000, right? You will be making an interest-only mortgage payment on that $20,000 foundation. So think of your monthly payments as interest-only during the construction period, and you're only paying on the money that you've drawn. And then right here, once the home is completed and you've actually moved in the home, that's when the mortgage will become fully amortizing, means you're fully paying it back. Right here, you move into the home after the construction is completed. So in this scenario, like we talked about, you're making mortgage payments when you don't live in the home yet. Now, they are interest-only payments, so they're pretty low, and you're not going to make your fully amortizing principal and interest payments until you've actually moved into the home. But a good thing to be aware of is that you are making payments while the construction is going on. So, all right, let's hop over to renovation loans now. Renovation loans or rehab loans, we've already defined it. We've got that out of the way. So this is always, a renovation loan is always going to be one closing, right? You're never going to have two closings. Again, I'll shoot another video to break down the difference between one and two closings. All right, monthly mortgage payment. So this is, I'm going to hit on this point first. So you're paying on the full amount right off the bat, and there's no interest-only payments whatsoever. So here's an example of this. Let's say you are putting on an addition, right? And the framing is going to be 20 grand, and whatever, the roof is going to be 10 grand, and the finish work is going to be 10 grand, right? So it's $40,000 altogether. You are going to start paying on that $40,000 as soon as you close on that loan. Even though the roof hasn't even been started yet, the framing's not up, you will be paying on that full amount as soon as you close the loan. And those payments will be fully amortizing, meaning principal and interest. I hope that makes sense. All right, here's a big point too. 9 times out of 10, you will be living in the home during the renovation process. Because like we said, we're working on an existing home when it comes to renovation loans, right? So you're either refinancing, so you already live in the property and you're renovating it, or you're just purchasing it. You're purchasing a new home, and you move into that home, and then you live there while the renovations are taking place. Quick caveat, if there is some massive renovations that are going on and you can't live in the property during a renovation loan, you can finance the mortgage payments, which will allow you to kind of kick the can down the road and allow you to live somewhere else while the renovation takes place. So it is possible. It doesn't happen a lot, but it is possible. When you're thinking renovation loan, think about FHA 203K. That's a really popular renovation loan. And think about Fannie Mae Home Style. So real quick, I hope this helped. Difference between construction loans and renovation loans. Big difference. When you're thinking construction loan, think that you're buying a piece of land and you are constructing a home from the ground up when there was no home to begin with. When you're thinking about renovation loans, here's the big piece right here. Existing home. You are renovating or you're repairing or you're improving an existing home. I hope this helps. I love making these videos, so if you have any topics, questions, hit me up anytime. Thanks.